Hey guys, welcome back to episode 14 of US Stock Market Technical Analysis. I hope you guys had a great year so far, and it's been 2 weeks since I released the last US Stock Market Technical Analysis video. And for all you guys who are new to this channel, I share my US Stock Market Technical Analysis every 2 weeks. And in this technical analysis videos, I share my insights of the S&P 500, the Dow Jones and the Nasdaq. Okay, let's get started. So we'll begin with the weekly time frame for the S&P 500. After the drop due to the pandemic, the S&P 500 managed to recover very quickly. And over at this side over here, the S&P 500 managed to form a nice base. This base allows the S&P 500 to digest the move before here, and it also sets up a foundation for the S&P 500 to move ahead from there. After prices broke above this base, we see that the S&P 500 has been moving ahead. If we bring on the moving average, specifically the 150-day moving average, you see that right now the S&P 500 is very far away from the 150-day moving average. It tells us that the S&P 500 right now is a bit overextended. If we zoom out a bit on the S&P 500, the S&P 500 has generally respected the 150-day moving average. This was the first test, this was the second test, this was the third test, fourth test. Over the years, the S&P 500 has generally respected the 150-day moving average. And if we take a look at the price chart for the S&P 500 from afar, right now, the S&P 500 is a bit overextended and a bit far away from the 150-day moving average. Moving forward, this is something that we can pay attention to. And I personally believe that in the coming months, not necessarily 1 to 2 months or 3 months, it can be 7 to 8 months from now, I believe that the S&P 500 will either rest for a while or it might experience a bit of correction because the S&P 500 right now is a bit overextended. This doesn't mean that the S&P 500 has to retrace back to the 150-day moving average. It can continue to charge ahead. When prices are overextended, it just tells us that there's a higher probability that prices will retrace back a bit. But it by no means means that prices have to 100% retrace back. So that is for the weekly time frame. Now let's move on to the daily time frame. So we'll clear the moving average and then bring on our technicals. Let's zoom in a bit over here to see where prices are currently. Over here, prices managed to form a bit of a base because it allows prices to digest the rally before and sets the foundation for a future rally. And in fact, for this base, we also see prices forming a double bottom pattern, which is quite a bullish sign for us as investors and traders in the stock market. This was the first bottom and then this was the second bottom. And after prices broke above the base, prices has been charging ahead. And if you see right now, prices are moving within this tight range from the price of around 381 to around 376. Let's go on to the 1 hour time frame to see how prices are reacting to these levels. Over here, we get to see how prices are reacting to the resistance level and the support level. Prices encountered resistance over here, some support over here, resistance again, support, found support again, then found resistance again, and now it's back in the range. And when prices are trading in a range, it means that the bulls and bears are battling one another. And so far, there's no clear winner. If the bulls win, then prices will break to the upside and then move on from there. And as always, if prices break above the resistance and rallies, and then it retraces, if prices retrace back to this level, for the bullish momentum to be still in place, we want to see prices finding support at that old resistance level, and then rallying up from there. If on the other hand, the bears win the battle against the bulls, then we will likely see prices breaking to the downside, then move on from there. Another possible scenario is that the bulls and bears continue to battle out and there is no clear winner. This would mean then the S&P 500 will continue to trade in the range for a while. That's my technical analysis for the S&P 500. Now let's take a look at the Dow Jones. We'll go on to the weekly time frame and then we'll clear the technicals. If you're more observant, you will have noticed that the price chart for the Dow Jones is very similar to the price chart for the S&P 500. We had this very fast and steep decline of prices due to the pandemic, and then an equally fast recovery of prices, and then we had a small base over here before prices broke to the upside and continued its rally. The base here formed by the Dow Jones on the price chart sets the foundation for prices to move ahead. Even without putting on the moving average, we can see that prices are a bit overextended right now. Because over here in the most recent weeks, we see that prices have risen almost parabolically. And if we turn on the moving average over here, prices are also a bit overextended because prices are far away from the moving average. And if we zoom out a bit, we see that the Dow Jones has also generally respected the 150-day moving average. So this was the first support, then we had the second support over here, third support, fourth support, fifth support, and then because here prices broke below the moving average, it went back up and then it managed to find support over here again. Over the long run, both the S&P 500 and the Dow Jones tend to respect the 150-day moving average as a dynamic support level. The last time prices were very far away from the moving average and overextended was back in 2018. And then after that, prices basically ranged for a while before it corrected. So in the coming months, I believe that there's a high probability that prices are likely to range or correct itself. And again, this does not mean that the Dow Jones will correct or range in the coming month or 2 months or 3 months or so. It can be even further up from there, like 7 to 8 months to even 10 to 11 months. Right now, for the S&P 500 and the Dow Jones, both indexes are a bit overextended and far away from the 150-day moving average. And when this happens, historically, the prices of these two indexes are likely to range for a while or correct itself. And if we move on to the daily time frame for the Dow Jones, let's take away the moving average and then bring on the technicals. And then we'll zoom in a bit over here. Over here, prices were trading in a mini range, and then prices broke above the resistance and managed to find support here, and then it continued to move up. And if we zoom in a bit more over here, we see that there's a bit of price rejection at this price level of around $311. There's a bit of price rejection at that area because of the upper wick formed by this bullish candlestick over here and this bearish candlestick over here. The long upper wicks of these two candlesticks indicates to us that there was selling pressure at the price level. If we go on to the 1 hour time frame, the potential resistance is at around the price level of $311. Price rejection over at this candlestick over here, this candlestick over here, and you can also see the resistance forming at this level of $311 at this right side of the chart here. Moving forward, in order for the bullish momentum to continue for the Dow Jones, I want to see prices breaking above the price level of $311, then maybe find support at that level and then continue to move up from there. If prices break below this support level, then the next support level that I'll be taking a look at is around this price level of $307. Because if we look to the left side of the chart, prices managed to find support over here and find support over these two candlesticks over here. If this support level doesn't hold, then the next support level that I'll be taking a look at is this price level of around $303. That's my technical analysis for the Dow Jones. Now let's take a look at the Nasdaq. So we'll start with the weekly time frame and then work our way down from there. So let me clear the technicals. For the Nasdaq, the recovery from the pandemic has been even more eye-catching. From the low of around $167, prices have almost doubled to the current price level of around $314. That is almost a 100% gain in just less than a year. And we take a look at the rise over here. The rise of the Nasdaq has been relentless in the past couple of months. And similar to the S&P 500 and the Dow Jones, the Nasdaq is also a bit overextended. What do I mean by that? For example, if we take a look over here, whenever there's a meaningful rally, what follows the rally tends to be a bit of a correction. So there was a rally over here, then a bit of correction over here, and then another rally, then another correction. But if you see in the past couple of months, other than this base over here, the Nasdaq has basically rallied all the way without facing any significant correction. And if we bring on the moving average, you see that the Nasdaq is overextended from the moving average and is very far away from the moving average. And if we zoom out, the Nasdaq has also tended to respect the 150-day moving average. So this was the first test, the second test, the third test, fourth test, fifth test. And if you see right now, taking a look at the current price and then comparing it to the most recent years, the Nasdaq as of 2021 is the furthest away from the 150-day moving average for the past 6 or 7 years. I'm not being all bearish right now. In fact, I have still long positions in the stock market. What I'm trying to share with you guys is that the three main indexes in the US is overextended. And I believe that there's a high probability the US markets and the three indexes is likely to either rest for a bit and trade in a range or face a bit of a correction. With that said, I'll be paying very close attention to my long positions in the market. Now let's move on to the daily time frame for the Nasdaq and then bring on the technicals, and then we'll clear the moving average. If we zoom in over here a bit, this was the range that prices traded in for a while before prices broke above, then found some support and then continued to move up. Right now, prices are finding support at the $314 level. And we zoom in a bit more, this week's bearish candlestick might potentially engulf the previous week's bullish candlestick. And if this week's bearish candlestick engulfs last week's bullish candlestick, then it will set up a bearish engulfing pattern. And a bearish engulfing pattern is a bearish sign for us as investors and traders in the stock market. With that in mind, let's take a look at the 1 hour time frame. We'll zoom out a bit over here. This was the resistance that prices were encountering, and then after prices broke above the resistance, it managed to find some support, but the support did not manage to hold and prices break below the support. Then the next support was at this level over here, and then we can see that for this candlestick over here, there was a lot of buying pressure at this support level of around $311. We know that there was a bit more buying pressure at this price level because we see that for the candlestick has a very long lower wick. Prices found support at this level over here, and it bounced back up, and then right now prices are still finding support at this zone over here. So moving forward, if prices break below this zone, then the next support zone that I'll be taking a look at is this zone over here, the $311 price level. If prices move to the upside, then I want to see prices breaking above this price level of around $317. Because at this price level of $317, prices encountered a bit of resistance towards the left side of the chart over here. So for the bullish case to be made for the Nasdaq, I want to see prices breaking above the $317 level and then maybe finding support over there and then continue to move to the upside. That's my technical analysis for the Nasdaq, and that wraps up my January 2021 US stock market technical analysis video. If you have liked and learned something from this video, smash that like button because it will really help the channel grow and allow me to produce more content such as this. And if you want more weekly videos such as this, make sure you subscribe to this channel because each week I produce one new video about investing, trading and the stock market. I'll see you in those other videos to your financial success.